Today's top stories at NBR: accountancy practice responsible for identifying a potential valuation issue resulting in a deep tech fund withdrawing its latest capital raise identified. OIO clarifies stance on foreign investment in build-to-rent assets. Strong growth in assets under management and accelerated returns for My Farm. And there's more coming right up. Kia ora and welcome to NBR Today, 100% subscriber funded and proudly brought to you by you, as is every story at nbr.co.nz. It's Monday, April 4th. I'm Paul Brennan. Thanks again for joining us. After getting off to a rocky start this morning, Monday morning, Air New Zealand rights are trading correctly, according to an NZX spokesperson. The airline shares went ex-rights today, Monday, and saw a correlating drop in value. But trading in the rights themselves was halted due to administrative errors at the NZX. NZX identified administrative errors and steps were taken immediately to correct them to ensure market integrity was maintained. NZX can confirm no rights were traded during this time, said a statement which was delivered at 2:30 p.m. Monday. According to NZX's website, there has been no trading in the rights so far. Bruce Shepherd's accountancy practice was responsible for identifying a potential valuation issue that resulted in deep tech fund Matu Iramoe withdrawing its latest capital raise from the Catalyst public markets platform last Friday. The firm, Gilligan Shepherd, is a limited partner of Matu Karihi, the deep tech fund underlying Matu Iramoe, said Ken Erskine, director of Matu Group. Erskine told NBR that Gilligan Shepherd had identified a potential technical issue with the calculation of net asset value per unit, which could have a flow-on effect on the Matu Iramoe capital raise unit price. The Overseas Investment Office has clarified its stance on foreign investment in build-to-rent assets, but advocates say more certainty is needed to increase the flow of quality, long-tenure rental properties. Supporters of the asset class, touted as an important tool in solving the housing crisis, have long said creating a meaningful stock of build-to-rent assets would require foreign institutional capital. The OIO said the Overseas Investment Act 2005 had provisions for developments that involve 20 or more new residential dwellings on residential land that would capture most build-to-rent developments. The Act doesn't specifically reference BTR at any point. The existing provisions mean, depending on the land being acquired, new build-to-rent assets of 20 might have access to a streamlined pathway for consent. ARC Chief Executive Kent Gardner, a build-to-rent developer and advocate, said the guidance notes provided some further recognition of what was required to achieve real institutional investment in the sector, being the ability to sell or acquire existing projects as a going concern. The CEO of property investment company Tramco, Angela Bull, has today, Monday, resigned from the board of Metropolitan Performance Glass with immediate effect. Bull, who joined the board of the company in 2017 and had since grown her shareholding in the business to around 0.04%, said after 5 years on the Metro Glass board, her stepping down was simply due to balancing commitments, including the role as chief executive of the Tramco Group and portfolio of directorships. Bull has recently stepped down from the board of Callaghan Innovation on March 19th. Callaghan Innovation's 2021 annual report said her term ended on that date. In a statement issued by Metro Glass chair Peter Griffiths, he thanked her on behalf of the board of directors and management for an invaluable contribution and commitment to Metro Glass since her appointment in May 2017. My Farm, the country's largest rural land syndicator and manager, has reported strong growth in assets under management and accelerated returns as it plans its first retail investment offer. Its track record of returns for the past 5 years shows its portfolio of primary sector assets under management has risen from $52.2 million in 2017 to $644 million at the end of 2021. The syndicator said investors have gained an aggregated pre-tax net return of 11.39% over the 5 years, after its relatively steep 4 to 4.5% upfront syndicate fee and annual management fee of 0.5% are taken out. However, that figure doesn't exclude performance fees, which vary for each syndicate, as they're still minimal at this stage and mainly apply to development syndicates where the orchards are yet to reach maturity, such as its Central Cherries development in Otago. The 36 syndicates span 11 sectors, including vineyards, apples, avocados, mangoes, kiwi fruit, hops, cherries, Manuka honey forests, and rural commercial property. Get the full details of those stories and more right now at nbr.co.nz. Tomorrow at NBR, in his weekly sports column, Martin Devlin gives his take on the America's Cup defence. He thinks the America's Cup is still New Zealand's cup. And in Margin Call, Oivind Rimmer says structural growth of new energy materials presents unique investment implications for long-term investors. I'm Paul Brennan. Join me again from around lunchtime tomorrow for the morning's NBR trending stories. Then right here again from 5:30 for another NBR Today.